And that was General Electric Chairman and CEO Jeffrey Immelt speaking tonight at the 92nd Street Y in New York City. For shell-shocked investors, what's it going to take to restore the trust? Matt Friend is Senior Vice President of Investment Portfolio Management at USAA. Stephen Wood is Chief Market Strategist for Russell Investments. And Yu-Dee Chang is Principal and Chief Trader with Ace Investment Strategies. Good to have you on the program, gentlemen. Welcome.
Thank you.
Yu-Dee, let me kick it off with you here. What did you see on your trading desk today? And give us your take on the so-called errant trades, Procter & Gamble, Accenture, and so many others.
Yeah, it's kind of interesting, Maria. I think during the middle of the day, boy, for a second there, it really felt like October of 2008. However, by the end of the day, actually, to me, the perception and the feeling is a little bit different. I'm sure the market was a result of the arrow trade. But don't forget, before the news broke out, the market was down about 3.2% already. I think this pullback in the market really did not come as a surprise to us. However, the speed of it is definitely a surprise. I think overall speaking, the market, believe it or not, I believe this is a temporary pullback. This time, it may take a little bit longer to repair, but the uptrend in the market, I still believe is intact.
Matt, we're heading into tomorrow in a jobs report. There is still a lot of belief that the U.S. economy is in a significant recovery. What are you expecting tomorrow? How important is that number?
Well, I think the jobs number tomorrow is going to be pretty important for investor confidence. So I think the consensus is right around 250,000 jobs. That would be very nice to see, given all of the negative headlines that have been out there. And I think that does have the possibility of stabilizing things a little bit here.
Stephen, does it feel to you that this is the beginning of a new correction? Do you feel that this selling is going to persist?
Well, I think we're pretty close to the 10% definition of a correction. I think we're there. But we're also there, coming into January and early February as well. But I think you were right on, Maria, with your observation about Basel III and the capital requirements in Europe. What we had in the United States pre-Lehman was a run on confidence, and it was more interconnectedness more than it was necessarily size. And I think that's the same thing for Greece as well. It's what Greece represents in terms of interconnectedness. And if you look at that Club Med debt, that's being held is being held on French, German, and Benelux balance sheets, and anywhere from 50 to 75% of that debt is held internally. So in some ways, this is like a Euro TARP situation where the donor nations really might not have much of an option, and I think Trichet and these countries are really going to have to get very proactive very quickly.
All right. Well, we talked about confidence, Stephen. Did you see that Accenture chart? How's somebody supposed to have confidence when a stock goes from 40 to 0?
To 0, yeah. And that is an excellent point. So when the trading systems themselves seem this vulnerable to whatever kind of errant trades or errors, that's certainly an issue. But, being at the NYSE today, you saw everybody was diligent around their screens. And what I was looking at, have the fundamentals changed. You're talking about the job number earlier. I don't know that we hit 250 on the jobs number tomorrow, but in the United States, we're doing a little bit better than okay on the economy. It's kind of a square root recovery, granted, not a V-shaped recovery, but earnings are doing pretty well, and I think that slow grinding recovery within a market that does okay, I think a year and a half from now, I think equities and higher quality risk assets will probably be in your favor, and treasuries continue to get very expensive on the U.S. side. But that being said, risk-free investments are taking on a new definition, so we might have to go back to our finance textbook.
Let's look at the fundamentals here. Does Greece really impact the United States?
Well, can I jump in?
Yeah, go ahead.
Okay. Sure. So, just on the earlier point, I think that the speaker was right on. We've had great earnings domestically, and I think that given all of the negative headlines, investors may be overlooking how strong the earnings have been. When you talk about Greece itself, the answer is it's not as significant, certainly, as the market reactions would lead you to believe. But
it's not about Greece. It's about Spain. Right. It's about Portugal. It's about Ireland and Italy.
That's right. And that's right. And it's actually, I was thinking about Iceland. That Iceland would never have been considered that significant, but it started a crisis of confidence. Yeah. And I think what investors are looking for is they are looking for overwhelming support. They are not really looking for a stepped reaction that, first you need 30, then you need 50, then you need 100.
Gentlemen, I hear the music. Yeah. We got to go. Thanks to all three of you for joining us.